the government of India is we all together, and the nation may need more to you rather than an individual.
That's why it's difficult to tell them that I won't be able to. The relationship is such that
Yes,
I just pull out one day and say I'm not going to be there anymore.
right.
Just waiting. Now some ASGs have joined. I hope they take off after some time. If they settle down well and they start handling matters, then I may become irrelevant. So then that's the time I can.
Not irrelevant, relevant for others.
Correct.
Yeah.
So,
But good, this association has kept this apt, and we all will be very much eager to listen to you.
Thank you so much, sir. Thank you so much.
Yes, thank you, Rikinbhai, and thank you, Bishan.
So, Sulabh, Bisamli, let us start the meeting. Okay. So it's already 5, and I welcome you all, especially N.VENKATARAMAN sir, ASG, Supreme Court of India, and our today's learned speaker for the day, the chairmen of Indirect Tax Committee Study Circle, Akshat Talani, and the Direct Tax Study Circle, Sulabh. Bisan Bhai, for coordinating the entire event. Thanks a lot for that. And my colleagues in the committee and in the EC committee and all past presidents. I welcome you all to today's meeting. And as you all know, it is always the effort of the association to organize the meeting, to share the knowledge for the members. We as a chartered accountants are always eager to get ourselves updated on the law, direct tax and indirect tax laws. And as we all know, the judgments of the Supreme Courts are the law of the land. And to deal with that, we have our eminent faculty for the day. At the outset, I would also take this opportunity to appeal to our members to join for our annual event of Diwali Get Together, which is already planned for on 8th November. And the registration is already open on our website. So kindly take the benefit of that. With this, I would request Sulabh, our Direct Tax Committee Chairman, to take the proceedings further. Sulabh, over to you.
Good evening, everyone. I welcome to all of you to the webinar on the analysis of Supreme Court judgment on the GST and income tax that Safari Retreats and Rajeev Bansal. For the today's session, we have renowned and learned speaker in the field of taxation, Sri N.VENKATARAMAN sir, who is a senior advocate and at present additional Solicitor General at Supreme Court. Sir, we on behalf of Chartered Accountant Association of Ahmedabad welcoming you to the webinar. We are grateful for your presence and expertise. As a professional navigate the complex world of taxation, we recognize the importance of staying updated on the regulatory changes and the best practices. I am sure that your invaluable insights and in-depth knowledge and experience in the field of taxation will gain to all the participants and to all the members of the associations. I would also like to thank CA Bishan Shah sir for his efforts in coordinating with the N.VENKATARAMAN sir. And I would like to further mention to all the participants that if you have any questions or queries relating to the topic, then we are planning to take the Q&A at the end of the session. And if speaker sir permits, we can take in between also at the convenience of the sir. So with this, I am handing over to the Mr. Akshat Vidlani for the speaker introduction.
Thank you, Sulabh. Good afternoon, friends. After a season of audit, we welcome you for today's seminar. We heartily acknowledge the efforts of CA Bishan Shah for coordinating such a big event, rather refreshing event of judgments of Honorable Supreme Court, it's privilege of mine to introduce today's learned faculty, Sri Venkataraman, sir. Sir, it's a immense pleasure to introduction of yours. Sir, it's a long list of achievement, but with your permission, and we will not take much time, sir. So, and we are very fortunate that today you are with us, and I would not like to come in between you and our today's audience. Sir has completed more than 3 decades of professional practice in the field of indirect tax, direct tax, international taxation, and since last 10 years, he has been doing extensive work in the constitutional law and various regulatory matters. Sir is providing his service as an additional Solicitor General since 1st July 2020, and that is also GST Day. Sir has appeared before almost all High Court and Honorable Supreme Court in various matters. Sir has involved in the matter of substantial public importance, such as Sabrimala case, Article 370, CAA, and also part of the matter that TOLA under Section 148 case and Safari Retreat and Rajeev Bansal case. So, sir, I will limit myself as you are very known faculty, and we would like to hear from you rather than me. So, sir, floor is yours, and thank you very much, sir, for joining. Thank you, sir.
Namaste Sharade Devi Kashmir Puravasini Twamaham Praptige Nityam Vidyadhanam Chidehimi. Dear Vishen Bhai, Deepak Saab, Sulabh, Akshit, and my dear brothers and sisters from Ahmedabad chapter. Neither I'm new to you, nor you are new to me. We have been interacting several years, either physically or virtually. And therefore, it is very, very hard to decline. When Vishen Bhai says, you should speak, I should speak. Simple. Because we had a very long session for almost 2 hours on TOLA last Monday, I think, 14th. It was well attended, but never mind those who have missed it possibly. And we also have today a fair view on Safari. So we'll take Safari first and then TOLA second, if it's fine for all of you. There are 2 important judgments which were delivered on the same day. In 3rd October or 4th October, on the same day, the Chief Justice Court delivered TOLA, comprising of Honorable Chief Justice Dr. Dhananjay Chandrachud, Justice Padiwala, who was from your High Court, and Justice Manoj Mishra. The Safari judgment was delivered by Honorable Justice Oak and Honorable Justice Sanjay Karol. It's a division bench. Now let's understand what is the issue in Safari and what has been finally delivered by the court. See, this is not a new issue at all under the GST. You had these limitations, conditions, and the non-eligibility or ineligibility since 2011, even under the service tax regime. What was the restriction? You used various building materials, cement, sand, iron rods, etc., and build a huge mall. Say, these raw materials and the various input services, they are worth 100 crores. And the ITC is 10 crores. We'll put it on a rough ballpark so that it's 10 crores. A mall emerges, which has been put into use for renting, because it's a mall. and you have started to earn rental income, which is a service provided by you in the form of rental of immovable properties for a consideration and liable to GST. So you bring in materials and services worth 100 crores. Then you put the labor in constructing the mall, which is now valued as, say, including the land, everything, I'd say 200 crores. And you let those mall for a rent of a few lakhs every month. The question that arose for consideration in the court was whether this 10 crores of input credit on cement, steel, and various input services, can it be utilized in discharging the liability on the rental income? That's the point. Say your rental income, say in a year is, say, 10 crores. And GST is 1.8 crores, 18%. Can you adjust this 10 crores against 1.8 crores month on month, so that you don't physically do a payment of 1.8 crores cash? Is this permissible? It's the simple one-line problem. Two provisions of the GST Act says no, according to us, which of course the Supreme Court has interpreted, which we'll come to that. So we started to deny this ITC because of Section 17C and Section 17D. These are the two sections. 17C is third-party contracts and 17D is own contracts. Earlier, it was both together in 2011 under the service tax regime. Now we split it into two. So the Parliament has said no ITC in both these cases. However, ITC, what we call them as works contract service. No ITC in works contract service, except if the erection is in the nature of plant and machinery, or plant or machinery, between clause C and clause D. I'll come to that a little later. So if it is plant and machinery, then you may be able to, other than plant and machinery, works contract, which is immovable, other than plant and machinery. So plant and machinery is defined: land, building, immovable structures, everything is defined under the GST Act. So 17C uses the expression plant and machinery. 17D uses the expression plant or machinery. Even though the original bill tabled before the Parliament for GST, both C and D used only the expression plant and machinery. The Act, when the Act was passed, D became plant or machinery. That's the main contention of the assessees, which has been upheld by the Supreme Court. Now, let us unravel the whole process, which is what was contested before the court. What was contested was, first point. Look here. Construction of a mall is an immovable property. If you see the definition of GST under the Constitution, including 246A, including the CGST Act, IGST Act, and the various state GST Act, even today, GST is only on goods and services. And goods as on date do not include immovables. See, when we migrated to GST, we started to subsume several state entries. For example, octroi 52, entry 52, list 2, completely subsumed into GST. Entry 54, list 2, sale of goods, except for 5-6 items, petroleum products and tobacco, alcohol for human consumption, everything is subsumed into GST. But till date, we have not subsumed entry 49, list 2 of the Constitution relating to land and buildings. So any levy on land and buildings, tax on land and buildings is still only with the states. That's what 9 judges have recently held so in the MADA judgment also. So a mall which emerges as a mall and immovable property goes out of the ambit of GST in terms of the constitutional limitation. It's not in GST at all because it goes to entry 49, list 2. And therefore, at no point of time, a GST officer will be able to collect a GST on that mall. Not possible. Not at all possible. So our contention was, look at the whole scheme in terms of section 16, 17, 18. These are the 3 important schemes for ITC. You can use the ITC only as a forward change sequence, provided the subsequent stage has a tax liability, and therefore that the taxes paid at the anterior stage is available as an ITC to remove the cascading effect. See, the purpose of ITC credit is 3 objectives. There must be a liability at the subsequent stage. There must be a payment at the anterior stage. Then allow ITC to the subsequent stage to remove the cascading effect of duty burden. You can read any minutes of GST starting from the first minute. This is the central theme. All right. If this is the central theme, one of the essential important conditions is the usage of cement, steel, and bricks resulting in a mall should be liable to GST, then cascading effect is solved. Suppose 100 crore raw material results in a 200 crore mall, and mall is liable to GST, say at 20 crores. Then your 10 crore can be adjusted against your 20 crores. Then your 20 crore payment can be adjusted against your rent of 1.8 crores per month. No problem. Absolutely no problem, because the cascading effect of duty liability is passed on. But if your building, which emerges at 200 crores value, cannot be taxed at all in GST because there's a constitutional embargo, it goes under entry 49, list 2. You can never reach it. Then the cascading effect of a duty liability on the mall would never arise under the GST Act, even under the Constitution under 246A. So the 10 crore cannot be adjusted against a 20 crore payment because 20 crore payment doesn't arise at all. Interestingly, if you read section 7 of the CGST, read with schedule 2 and schedule 5, there are some exceptions to what we are saying now. What are the exceptions? The law defines works contract in the case of land and building. Till such date, you don't provide the completion certificate, then the law deems it to be only a movable. any acquisition at that stage attracts GST. Only completion certificate deems it to be an immovable. So, when the building is under construction and a transfer takes place, then it is considered to be goods and not falling under entry 49 list 2 as land and building. And at that stage, when the transfer takes place, there is a GST exposure. Whenever there is a GST exposure at that stage, your 10 crores can be adjusted against. That is the law. There is no limitation there. So, when the law permits you to tax a mall in an incomplete stage without a completion certificate as a movable goods, then that is the understanding between states and the union. Once it goes into the completion certificate stage, then state takes over and imposes stamp duty. Once it does not reach the completion stage, it's an anterior stage, there's an exposure of GST because it still has not assimilated into an immovable property. The ballpark test. And states have agreed, we have agreed, and there's a mutual agreement. It's a federal partnership now under the GST law. Therefore, we don't have a confusion there. There, because there is a liability, we are taxing it, we'll give you the credit. But once a completion certificate is issued, especially what are the cases which came before the court is under 17D, where you construct your own mall and subsequently rent. Right. In those cases, now the works contract scenario remains the same, Schedule 2 remains the same, Schedule 5 remains the same, all this remains the same, but for one distinction. 17C uses the expression plant and machinery, and which is defined under the GST Act, under explanation to 17, saying land, building, etc., telecom towers, pipelines, etc. Whereas 17D says plant or machinery, which is not defined. So, in such cases, how do you construe? Is there a variation? Can you give credit for one and deny credit for the other? This is the question. The Honorable Supreme Court, there were two challenges to the law. One is eligibility of credit under 17C and 17D is one challenge. Another is the constitutional virus saying that you cannot restrict credit at all. GST law is a free flow of credit. You can't impose any fetter. You have to somehow give me credit. So there are three scenarios which the court has to decide. Scenario 1. A complete mall after completion certificate emerges under 17C. And that mall is used for renting. The court says, since it comes under the immovable definition and excluded under 17C, you cannot take ITC. So your 100 crores or 10 crores cannot be adjusted against the rental income of 1.8 crores per month because it is a third-party works contract under 17C. And under 17C, there is a definition of plant and machinery. And because it is plant and machinery, including land and building, these are immovable. Entry 49, you cannot take credit. However, if you fall under 17D, even though it is the same mall which is constructed on your own account, how many will benefit out of this? Honestly, we don't know because every mall is constructed only through a third-party contract. Nobody does it on their own. See, nobody buys cement, steel, bricks. Nobody engages his own labor to say, no, I'll build a mall myself. Unless otherwise, he's a builder himself. So 17D is a case of own account. So if somebody builds a mall in his own account under 17D, the Supreme Court says, because it uses the expression plant or machinery which is not defined, we are entitled to go and examine what plant or machinery under the Income Tax Act, common definition. And all judgments of Income Tax Act has been relied upon to say in such cases, you should pass on the credit. Your 10 crores can be adjusted against 1.8 crores of. It says so in some places of the judgment, without a doubt. Now, two questions arise. We are bound by the Supreme Court, and with reverence, we should accept it, unless otherwise we carry out a legislative amendment. Because the intention was always to call both as plant and machinery only. So here, is there at all a difference between plant and machinery and plant or machinery? See, what do you mean by plant and machinery? It's like pipes and tubes. Is there a distinction between pipes and tubes? Pipes are tubes, tubes are pipes. So, plant and machinery or plant or machinery is a cluster of synonymous expressions only. So, the first doubt we have is, which is also addressed by the Supreme Court in the same judgment. The first doubt we are getting is, whether it is falling under C or falling under D, whether there is a definition for C and no definition for D. If a mall is an immovable property governed by entry 49 list 2, can you still extend the credit merely because you have done it on your own account under 17D, in spite of the fact it uses the expression plant or machinery? Now, what happens? One portion of the judgment, the Honorable Supreme Court says, plant or machinery, I will go by common parlance, I will extend credit, please examine the functionality test, whether this has been put into use. But at the same breath, while deciding the constitutional validity as to whether credit can be restricted, ITC can be restricted or not, it says Parliament has got the power to restrict credit. 1. Parliament has got the power to restrict credit on immovables. 2. Parliament has to cognize the limitations falling under entry 49 list 2 because it goes out of the GST regime. So while declaring unconstitutionality, while declaring that it is constitutionally valid to impose restriction on ITC, it is no free flow. It is all, ITC is neither a constitutional right or a statutory right or a fundamental right. It is only a right which flows from a statute, which can be regulated, restricted, limited, or even excluded. You can't say, for which there are a number of judgments, which all these judgments have been captured in the judgment very neatly. It's a very elaborate judgment of some 100 pages. So the Honorable Supreme Court, when it dealt with the section relating to constitutional virus, sensitized the matter in terms of entry 49 list 2, saying that there is an embargo, immovability, therefore credit can be restricted. After saying in that section credit can be restricted on immovable because you can't tax it, it also says in another portion of the judgment, under 17D for own account, you will be able to take credit, you go and prove your functionality test. This is the discordant. I mean, how do you reconcile it? We don't want to move any clarification at all because Supreme Court is quite allergic to clarification or review or any such thing, because it will all not work. So fine, we'll see. I think the best wisdom is to simply amend the law, because even in 2017, our bill said plant and machinery only in both the cases. You have to simply clarify plant and machinery. The other portion of the judgment will apply for D also. It's an easier way to solve the problem. I hope Parliament does it. We don't know what they're going to do, but this is the easiest way to solve the problem, because the judgment itself records the fact your bill has only put it as plant and machinery. So when we say that it's a legislative error, it did not agree. When you have used it as plant and machinery everywhere, why did you use it here? Therefore, we will read only different meaning. Having not defined, we'll go by the common purpose. That's exactly the approach the Supreme Court has said, which is entitled to. Because it's no more judgment. It's not an argument. It is yet to. So we should bow down to a judgment with reverence. But who is going to be a beneficiary out of this judgment is $1 million question. Because how many will fall under 17D first? Own account. Every mall is only a third-party contractor builds it. So they're all governed by C. So that is first bucket. Second, even if you apply functionality tests, etc., there are paragraphs in the judgment when it holds constitutional virus. It says you can restrict credit because entry 49 on restrict credit on immovables. The same judgment also in some other place says, look here, you yourself under entry, Schedule 2 and Schedule 5 are taxing malls prior to completion certificate. So why not you extend credit? But the legal difference and the statutory dissection is very, very clear. Prior to completion of certificate, it doesn't go under entry 49 list 2, no stamp duty, only GST. Subsequent issuance of completion certificate, only stamp duty, no GST, mutually exclusive. We don't tax both. We don't say prior to completion of certificate, you pay GST and on completion of certificate, you pay stamp duty. No, because the conveyance happens. So when we say prior to completion, we are not taxing it as immovability. We are presuming it to be goods. And because we are taxing at that stage, we are allowing the credit to happen. Whereas once it becomes a mall, the judgment itself says it goes under entry 49 list 2. So we can't touch it. Only state can touch it. So when there is no tax treatment on that mall, how do we now pass on the credit to the renting stage is the question. So there are three huge apparently findings which can be read as we have now read. So how will somebody get credit under 17D is something which the mystery will unravel only when matters get examined at the lower stage, before which we don't know what Parliament wants, because the judgment very clearly records, very fairly records that bill stage. You have used the expression only plant and machinery, both in C and D. Therefore, this is where we stand as far as Safari is concerned. This is it. Rest of the things are legal issues in pure interpretation. We can deal it anytime, all if you can. But ultimately, for professionals and businessmen, please tell us whether we can take credit or not. That's the bottom line. Simple. So, who is going to benefit under 17D? We don't know. And how are they going to cross the barrier of entry 49 list 2 in a mall? We don't know. And taxing it at an anterior stage prior to completion is no way equal to, because the dissection is very clear in the law in terms of entry 49 list 2. So the last issue is, look here, you are saying so much for mall entry 49 stamp duty, then why did you impose GST and service tax earlier on the renting of the mall? It's an immovable property. Only state has the right. How did you impose service tax? How did you impose GST? For which this judgment also acknowledges that fact that you can do it because, see, 3 earlier judgments, whether it is income tax or gift tax or mining tax, India Civils, which was upheld in MADA, 9 judges recently. See, This same mall, you forget GST, service tax and GST, same mall, you are earning an income of 10 crore. Will you not, as professionals, go and ask your client to file an income tax return on 10 crores return as an income and pay income tax? Is it open for you to contend, no, this is immovable property, liable to stamp duty, therefore no income tax? Can you say no? 5 judges have said no. So you're gifting this 200 crore mall to your children. All of you, 4 of you, or 3 of you, 2 of you, 1, please have it, a gift. 5 judges have said, when you gift it, that mall is liable to gift tax, notwithstanding the fact it's immovable, notwithstanding the fact that entry 49 list 2 is an immovable property. So your stamp duty on an immovable asset does not detract the competence of a union law to impose income tax, to impose gift tax, likewise to impose service tax, likewise to impose GST. There is no embargo. That this judgment makes it very clear. So, merely because a mall used for rendition of a rental service is liable to GST doesn't mean the ITC credit can be directly utilized against it when there is a constitutional embargo on the mall which is outside the network, which this judgment recognizes it in some places, recognizing the entry 49 list 2. But also says if it is plant and machinery, plant or machinery, go by common parlance and then go to it. So this is how the judgment stands today in a perfect sequence. So it's for you professionals to advise what you can. Whatever you advise will be, there is an element of risk and an element of suggestion, because the judgment says everything here and there. Have to be. So we will see how to streamline the judgment. Hopefully, Parliament and the GST Council mulls over it and streamlines it. So this I'll stop there. Now on TOLA. I think most of you would have heard, but nevertheless, a few things I'll say on TOLA and take questions. In our very, very humble, I think most of the writ petitions are from Gujarat, Allahabad, Rajasthan, Delhi. So, chartered accountants of Gujarat are quite vibrant. I say this with a lot of love and respect to all of you. But my humble view is, personally, I said this also in the court, I said this also in the talk in Tax Sutra. The second round of litigation was something which could have been avoided after Ashish Agarwal. I don't know how you all thought you can build a case and also succeed by trying to say Ashish Agarwal is wrong judgment. How did you get the courage? Is something which is very perplexing to me. Would Supreme Court say its earlier bench exercising power under 142 was absurd? Because that is precisely your case. See, what is your case? Let's split it into 3 parts. And before the 3 parts, I'll come to this point, because this will sensitize how all the High Court judgments in unison got reversed. Supreme Court said very clearly, in fact, it accepted our plea. There are 3 enactments which are under dispute. One is the Income Tax Act. Another is the Finance Act 2021, substituting sections 147 to 151. And third is the TOLA Act 2020, extending the time. Right? The Supreme Court first identified the time, which is the period which comes within TOLA, and clearly earmarked it. 20th March 2020 to 31st March 2021 is the TOLA period. So any reassessment made between this window period of 1 year and 10 days, 11 days, is governed by TOLA. Anything prior to that, anything subsequent to that is not governed by TOLA. Any assessment post 1/4/2021, assessment, not show cause, assessment is not governed by TOLA. Similarly, anything prior to 19th March 2020, not governed by TOLA. So this 20th March to 31st March 2021, TOLA says, I will extend it first from 20th March to 31st March 2021. The Act itself extends it. And two notifications, one issued on 31st March, further extends it to 30th April. And the second notification, 27th April, further extends it to 30th June 2021. So, three things. TOLA period is March 20th to 31st March 2021. TOLA Act extends this period from March 2020 to 31st 2021 and further extended twice up to 36/2021. This is TOLA scheme. And it very clearly says, notwithstanding anything contained in the specified act, which includes Income Tax Act. So it overrides the time limits under the Income Tax Act. And two, it uses the expression any notice, any sanction, any communication. Any means all, including reassessment notices under 148. So, TOLA has nothing to do with the operation of the Income Tax Act. It is simply extending the time limit for various things, including reassessment. It has no other purpose. Now, your Finance Act 1/4/2021 substitutes 147 to 151. What does substitution mean? Substitution means two things. The earlier law stands repealed and the new law comes into place, and therefore, whatever proceedings which can be initiated for that period under the old law, if time is available, can be initiated using the new law. Because old law is now in vacuum, it's gone, extinguished. You can't therefore say because old law is extinguished, no assessment can be made. Can you say, because Finance Act 1/4/2021 came, if show cause notices were not issued between 31st March, all assessments for all 4 years, 6 years will all go once and for all. Can you say? You can't say. So the Supreme Court said, look here, understand it clearly and carefully. Prior to 31/3/2021, the old regime of 147 to 151 existed. Therefore, for any reassessment notices issued between 20th March 2020 to 31st March 2021, if it has been issued, you can issue it under the old law of 4 years and 6 years. Whereas, if you issue the notice post 1/4/2021 for the same period, March 20th, 2020 to 31st March 2021, then you should apply the new law because the old law goes. So 4 becomes 3. threshold of 1 lakh becomes 50 lakhs. And 3, if you're going to invoke 6-year period, you can invoke it only when the threshold is above 50 lakhs. These 3 things are embedded in the new law. And we also considered it as recorded on concession and as beautifully captured in the judgment on its own also. It has dealt it. Not because we conceded. Also then that's the right way. Better concede. That's how it is dealt it. So, any reassessment notice issued prior to 31, 4 and 6 and 1 lakh. Any reassessment notice issued post 1/4/2021, 3-year period, 50 lakhs threshold, 6 years should be subject to 50 lakhs threshold. This is all the Substitution of Finance Act can do. How do you get, Supreme Court has said, how did you imagine? Because Finance Act got substituted, TOLA is gone. Where do you get this? From where did you ever imagine this? See, substitution is still part of the Income Tax Act. See, when you substitute Finance Act 2021, it goes and falls. It only becomes an integrated, it melts into what is called the Principal Act called Income Tax Act. And that Income Tax Act is a specified act under the TOLA. And TOLA says, overriding, notwithstanding anything contained under the Income Tax Act, which means, according to you, notwithstanding anything contained means only up to 31(3), not to Finance Act. Finance Act is also part of Income Tax Act. If you can apply TOLA over Income Tax Act up to 31(3), what is your problem in applying TOLA under the new act up to 36? Because there is an extension up to 36. Use the new law. Don't even see, it said 2 things very clearly. Assessee is incorrect in its understanding to say, because of Finance Act, TOLA expires. That's wrong. Equally, if the revenue believes, because of extension of TOLA up to 36/2021, the old law which got extinguished, and the new law came, got extended up to, you can't say the old law got extended up to 36/2021. That is also wrong. Both of you are wrong. Assessee is wrong in assuming TOLA extinguishes. Revenue is incorrect in understanding that old law extends up to that. Both are wrong. And that is why Ashish Agarwal was passed in a very, very judicious manner. It upheld. All of you were crying against me for getting Ashish Agarwal. How many of you? Other than pelleting stones, short of pelleting stones, you were doing everything to me for getting Ashish Agarwal. But Supreme Court has upheld it. Why did it uphold it? It said there has been a misguidance in both ways. Therefore, Supreme Court in Ashish Agarwal did not quash any of those 90,000 notices. It preserved the notices. There are 100. It preserved the notices. But made 2 important directions in favor of the assessee. This 148 old notice issued under the old law will be construed as a 148 AB notice as a show cause. To follow and pass a 148 AD order. After giving information, after soliciting reply, after passing an order under 148 AD, and if it still considers fit, then it should go and issue a notice under 148. So it streamlined the process and said only the new law will apply. So 4 years will become 3, 50 lakhs will apply, 6 years less than 50 lakhs should be dropped automatically. How many thousands of notices will get automatically dropped? See, for example, as per Ashish Agarwal, as per Rajeev Bansal, 2015-16, If you have issued, if reassessment is issued prior to 31/3/2060, 2030 or 21, 4-year will apply. Under TOLA. But if his notice is issued between 1/4/2021 to 36, only 3 years will apply. Therefore, 2015-16 is gone. If notice is issued after 1/4. Of course, if the case can be brought under 6 years, then you don't have a limitation. You don't need TOLA order. Because time is available till 22 March. So we have considered para 63 or 65 has recorded that fact that 2015-16 post 1/4 is governed by 3 years, and therefore TOLA cannot travel there because the period expires prior to 20th March 2020. So TOLA cannot apply. That's one relief again granted. See, 4 to 3 is one relief. 50 lakhs second relief. 6 years subject to 50 lakhs the third relief. 2015-16, if initiated between 1/4 and 36, is barred. These are 4 direct reliefs given to assessees in TOLA. And the last aspect, which it upheld Ashish Agarwal is, see, all of you argue very surprisingly. See, Agarwal was delivered on 4/5/2022. Okay, after the TOLA period. After 36. So, when Supreme Court has said 30 days time to supply materials, 15 days time to file reply, then passing an order after 2 weeks, all that it has said. If you stand up and say, look here, my notices have been issued only in July 22 and September 22 or August 2022. So, it is beyond, this is TOLA period is beyond 36. It's beyond 1/7/2022, my 148 notice. So, it's all gone. All the notices have to be quashed. What do you mean by this? You are saying Supreme Court has given the revenue a fruitless remedy. So when it passed the order on 4/5/2022, knowing fully well it's post-TOLA period, so you will start with saying that it's a frustrated, frivolous, redundant, fruitless order passed under 142. This is how you will want the court to construe 142. Absurd. How will it be possible? So the Supreme Court, this is what we pleaded and it upheld it. We said the period has to be split into 3 parts. 1/4/2021 to 36/2021 covered by TOLA. 4/5/2022 onwards covered by Ashish Agarwal. Now, can you say 1/7/2021 to 3/5/2022 is gone? Ashish Agarwal has no use to it. Therefore, all notices have to be quashed. How do you read this vacuum, this hiatus? And thanks to Supreme Court, neither of us argued this point. The court has come out with a brilliant answer. It is court's own contribution. Neither we argued nor they argued. Completely give it to the court. It took 2 judgments, Chamundi Mopeds and VLF Finance, both cases, and said, look here, when an assessing officer is disabled from passing an assessment order, then that disability should be construed only as a stay of the proceedings. Because till 4/5/2022, the assessing officer could not have passed an order because you have all succeeded in various high courts. So how could the assessing officer pass an order? And on 4/5/2022, the Supreme Court regulates it under 142 to say that treat this and start the process again under the new law. So the assessing officer gets the ammunition, the legal eligibility to start the process only from 4/5/2022. So when he's disabled between 1/7/2021 and 3/5/2022, how do you call this as barred by limitation? It is also in the form of a stay. this disability has to be construed as a stay. And it relied on 2 earlier judgments. It's not that it... Am I audible? Am I audible now?
Yes, yes, audible, sir.
Yes, sir.
So it filled that vacuum, that hiatus, and said, look here, since notices issued from 1/4/2021 to 36/2021 are not quashed, they are regulated. Step 1. Step 2, 1/7/2021 to 3/5/2022, disability to pass an order. Because there's no order at all in empowering the AO to pass. 4/5/2022 and 30 days period, 15 days period, therefore so and so, so and so. Ability to commence the proceedings, all should be read together. And that is how it upheld TOLA. And in para 112 and 113, it also factored how to compute the balance limitation period beautifully. It has given illustrations. How to compute the balance period. Nothing is left out in the judgment. And I can tell you this as a lawyer arguing both. It was 1:14 or 15 in Safari. One here we represented from and 14 other councils on the other side. When it came to TOLA, it is 1:30. It was such a wonderful experience personally for me for learning. I should thank all my brothers and sisters who had argued their very best. Brilliant arguments are placed in both the matters, and it enabled us to learn a lot. I should say that with all the humility. And courts have also been extremely patient in their listening. They participated so well. And they have been... So, this in a nutshell is Safari. A safari on TOLA. Okay, can put it that way. This talk is a safari on TOLA, or a TOLA on safari, or a toll on safari, whatever you want to call it. I should thank Bishan Bhai, I should thank Rikin, all the team, and our dear brothers and sisters from Ahmedabad and other places for having provided this wonderful opportunity. I can take a few questions and then after that we can close the session. Yes, go ahead.
Respected N.VENKATARAMAN sir, it was joy listening to you. Namaste, pranam, and we are fortunate that we have got such nice, wonderful soul, intelligent, brilliant, who has got the interest of the country at heart, and we are safe, in the hands of the government, and a person like you who are arguing for the government for a cause. Leaving aside self-interest, the interest of the country is at heart, and we are very happy. I'm personally thank you for being such a wonderful soul, and we've got high regards, respect for you, and it was joy listening to you. Sir, there are certain questions which are there in the chat box, and I'll take them. Riken Bhai, is that okay? Will I
Yes.
go with
Yes, sir. Yes, sir.
Before that, Deepak wants to ask one question. Can you permit Deepak to ask that question? And then
Yes.
we'll take it.
Go ahead. Okay.
Thank you, sir. Just some guidance from you I require for 2 aspects. The explanation to section 17(5) C and D is about the construction. It says it includes all other thing and to the extent of capitalization. So construction to the extent of capitalization read with on his own account. Do you see any difference that on his own account is qua self-construction by purchasing goods and services, or is it that on his own account means even by works contract constructed and capitalized in books of account as building? So, sir, this is one question. And the second one is, now the Supreme Court has asked the matter again to be dealt with by Orissa High Court, and with the directions about the functionality test. So, sir, just I want to know whether which type of buildings you feel that may be treated as a plant based on those functionality tests, say whether a factory building or a work place like WeWork, which they give for working space, or say a software company having a number of persons sitting there and rendering services, whether this building can be treated as a plant, office building, where entire team of the 500 people are working there. By that, they are generating 1,000 crore revenue. So the service is rendered from such a building, and ITC can be taken treating such a building as a plant.
See, I'll
Sir,
answer.
please.
Yeah, I'll answer it in two parts. I'll take the second question first. See, what will be eligible or not, at the moment, I don't want to speculate for the reason. Matter is remanded, and we don't know whether they'll engage me to argue. So, unless I make a complete assessment of the possibility and how the court understands and perceives the problem, don't want to be now saying in a talk, this could be, that could be eligible, or this could be eligible. It will not be fair on my part to do that. I need to also consult the government before I speak on that. But more importantly, when the judgment at one breath says entry 49 list 2 limitation will apply to immovables and says plant or machinery you can extend functionality test, how do we reconcile both? And maybe wait for February, we don't know. If the parliament chooses to amend plant or machinery as only plant and machinery, you are gone. If they choose to, because after all, it's simply a draftsman, a devil, a legislative devil, error. I don't think we can read anything beyond that into it, though the court has given a different, and more importantly, see, you're all also income tax practitioners. In income tax, immobility is not a criteria for depreciation. All right. So there, ordinary book, our books can be plant and machinery for a lawyer. The commercial understanding under Income Tax Act is not contingent upon whether it's movable or immobile. Whereas in goods law or service tax law, it is contingent upon the constitutional limitation, because goods do not include immovables. It's a constitutional embargo. The moment we subsume entry 49 list 2 into the GST model, then the disparity goes. There is no distinction between immovable or movable goods. Otherwise, entry 49 list 2 cognizes the difference. Even parliamentary enactment cognizes. When you have a GST Act for goods, you have a Transfer of Property Act for immovables. Can you go and tax sale of goods under transfer of property? You can't do that. Likewise, can you tax immovable under GST? Can't do that. So this question, especially when the Supreme Court recognizes this limitation and says so in some paragraphs. So this is one doubt. And coming to your first point, on own account, Supreme Court has nowhere said on own account can be third-party purchases. Okay. No such interpretation flows from the judgment. Therefore, the distinction between C and D, on own account has to be on your account. That is why I was also hinting indirectly, how many of you are going to benefit under 17D is $1 million question. Somebody engaging their own contractor in their books, somebody buying their own steel and building. I don't think it is humanly possible or even commercially possible. So how far this judgment is going to be benefit those classes? Supreme Court has nowhere diluted 117D to say on account will include third-party contractors. No, it can't. It can't. So these are the limitations. You have to be very careful in advising a client when it comes to Safari. Because people, even including me, I thought my first reaction was, okay, operation success, patient died. This was my reaction. I sent a message also to the Revenue Secretary that way. But after reading the judgment, I said, no, patient is still kicking. He's not dead. There is so much to say for and against in the judgment. The judgment itself says a lot of things for and against. So, all right.
Thank you very much, sir. Thank you. Riken Bhai, do I go ahead with the query in the chat box?
Yes, sir. Yes, sir.
Thank you, Riken Bhai. Sir, Mr. Nitin Bhuta from Mumbai asked the question, considering synergy of words, plant and machinery in section 17, subsection 5, clause C, works contract, and plant or machinery given in section 17, 5D on own account, and examining with functionality test read with accounting standards and allied laws. For example, in respect of under construction property, GST is payable under Schedule 2 and stamp duty is payable under state law on agreement for sale. So if GST and stamp duty are mutually exclusive, then how both our taxes are payable by us? That's the question. Your views are solicited, sir.
Yeah. See, they are mutually exclusive only. I'm not sure about this stamp duty and agreement to sale. That's a distinct aspect of the transaction. Okay, it's not a part, because you can enter an agreement to sell. You need not enter an agreement to sell. Nowhere it says every sale should precede an agreement to sell and that should be registered. Nowhere it says. So agreement to sell GST is separate. But when it comes to a transactional sequence, prior to completion certificate, GST, post completion certificate, stamp duty.
Right.
That's the law, and there is no overlap. States and the center have agreed on that.
So
there is no levy at all.
Yeah. Thank you, sir. Sir, the next question is from Mr. Manan Doshi, and he says, sir, whether hotel can be treated as plant under section 17, subsection 5, clause D?
No answer at the moment, sir.
Okay. All right. Thank you, sir. Then we have a question from Mr. Bhavya Popat. What is the situation for hotels in your view? Hotel would be normally, the answer has come.
Yes.
Then we have a question from Vaibhav. Sir, a developer avails works contract service and sells the commercial property. Will its works contract service ITC be restricted under 17(5)(c) as it is availing works contract service as input service and output service as a construction? Is constructed service and works contract service different or same? Please share your views.
Oh, the Supreme Court has very clearly said, as far as 17C is concerned, the definition of plant and machinery restriction will apply. So plant and machinery includes land and buildings. So the restriction will apply.
Okay. So the next question is from Mahimaji. For assessment year 1560, if escapement is more than ₹50 lakhs, time limit expires on 31st March 2022. Thus, the notice issued between 1/4/21 to 30th June 21 in old regime and not issued in new regime, even if time is allowed up till 31/3/2022, is time barred for assessment year 1516.
See, if they are, instead of invoking 6 years, they have invoked only 4 years, which now becomes 3. Then take the benefit. Simple. Now they can't go back and they could. I don't know whether they have issued it again, but they would not have. Then they can't issue it now.
Thank you, sir.
What is within 6 years? If it is, if they are, I see from Mahima saying it is for 6 years is maintainable. 6 years is maintainable because you don't need TOLA for that. If it is above 50 lakhs and 6 years, you don't. It is not contingent upon TOLA. It is independent of TOLA.
Thank you, sir. The next question is from Pujitha, and
so is it time barred? No, it is not time barred, Mahima. Yeah.
A company has entered into works contract service for renovation of office. The invoices are raised under 9954 on milestone basis. During this process, there is certain movable furniture which got created in the process. Is there any alternative way for the company to take credit on furniture, movable goods?
See, if you are manufacturing movable from wood, better pay GST. If you have purchased furniture as movable and it has become part of the whole structure, now how do you say your chair, the GST paid on chair is used in the plant and machinery in the output of the, especially these chairs are all in the office building. Suppose they are part of the factory building. you have at least a space.
Mhm.
Part of the administrative building. And I think the amount will also be quite trivial. Take
Okay.
a chance if you want.
So the next question is from Bhavya Popat again, sir. What is the logical reason in your view to distinguish hotels from malls?
I don't see any logic.
Okay.
Because both are immovable property. Functionality test subject to entry 49 list 2 should be read or not is something which we need to work on it. So I'm not able to comment at the moment.
So the next question is from Sweta Tibrewala. She says a C judgment has observed at one place construction cannot be said to be on taxable person's own account if it is intended to be sold or given on lease or license. How do we interpret the same?
Which para have they said this? I mean, I thought they have not said it.
Sweta, can you speak?
Which
Sweta,
paragraph? Which paragraph?
Good evening, sir. Yeah, I'll just tell you the paragraph.
See, building on own account is distinct from own use. Okay. 117D, the distinction is not on own use or third party use. The cutoff point is own account. How can own account be read as own use? Nobody argued it. I don't know how they say that. I'll have to see. I mean, I was under the impression there is no finding. Now that you say there is a finding, I'll have to examine that. But it's slightly, I mean, it looks to be therefore an overstretch. When the language employed by the parliament is own account, which is the construction, and not own use. Own account still lent will be only own account only. So let's see. I mean, I
Yes,
didn't know.
sir, it is. Yeah. It is in, sir, it is in clause 32.
Para 32.
Yes.
Please read that sentence.
Yes, sir. So the para 32 reads as clause D of section 17.5 is different from clause C in various aspects. Clause D seeks to exclude from the purview of subsection 1 of section 16 and 18 goods or services or both received by a taxable person to construct an immovable property on his own account. There are two exceptions in clause D to the exclusion from ITC provided in the first part of clause D. The first exception is where goods or services or both are received by a taxable person to construct an immovable property consisting of a plant or machinery. The second exception is where goods and services or both are received by a taxable person for the construction of an immovable property made not on his own account. Construction is said to be on taxable person's own account when it is made for his personal use and not for service, or it is used by the person constructing as a setting in which business is carried out. However, construction cannot said to be on a taxable person's own account if it is intended to be sold or given on lease or license.
Nice. You see, intent to be sold, I agree, because you divest your ownership. But lease is whether own account or non-account. See, construction on own account is different from construction for own use. Let's see. Now that you have told me. Good. Thank you so much, Shweta.
Yeah, thank you, sir.
Thank you.
sir, there are no other questions, but if it is convenient to you, I'll make this.
Jagrat is writing something. Jagrat, come on, what is your question?
Yes, sir. So, Pranam, sir. I think that in para 37, sir, the decision reads that whether the activities or transactions covered by subsection 1 of section 7 constitute a supply has to be considered in light of schedule 2. Now, sir, I find that you need to look into whether it is supply or not first, and then whether if it falls in supply, then you go into schedule 2. So I find that this line in para 37 may not be the correct interpretation of section 7 that has been given by the Honorable Apex Court, sir.
But it proves to our advantage. So we'll say that this is not a supply at all because it's removed. Because it's not supply of goods. See, That's the problem. This judgment goes back and forth in several places. Let's see. Easy way is just to amend plant and machinery as plant and machinery. So that will solve all the problems.
Yes,
For
yes.
16, 17, 17, 18, what will be
Thank
the
you, sir.
position, sir? 16,
16,
17,
17, 18, 4-year period will apply. This 3-year will apply with the TOLA.
now can you elaborate, sir? Just for understanding, for everybody
No,
understanding.
any elaboration is this. 16, 17, 17, 18, apply the test of TOLA March 20th to June 36, 2021. It falls within that, it touches the TOLA period. Therefore, it is safe.
Therefore,
And
it
if it's going to be 6 years and above 50 lakhs, you don't need TOLA at all. You have comfortable time till 22-23.
if 17, 18, 1st July, 1st April 21, notice is issued, then what will be the position, sir?
It will apply, sir. It will apply.
Acha.
Only exception is 15-16.
Okay, okay. Thank you.
Sir, sir, one question from the participant, CA Rajni Bhai.
तो मेक पेमेंट में गए तो मोबाइल नंबर और ईमेल आईडी तो उनका डालना पड़ेगा नहीं आपका
Yes, sir. So the question is TOLA applicable for AY 15-16? Second point is, in the chart given in the order of Rajeev Bansal, department considered that for AY 15-16, notices will be considered as invalid. However, few authors have opined that for escaped income above 50 lakh for AY 15-16, time limit from date of original notice till date of reply by the SSE to the new notice should be stayed and added to the time available for issue of new notice under section 148.
It's
So,
not
sir,
complicated. No, I said this in the talk, I'll repeat it. As far as 15-16, if notice is issued for 31/3/2021, 4 years will apply. Therefore, you do not barred by limitation. TOLA will apply. If it is issued after 1/4/21 to 36/2021, even if apply TOLA, 4 becomes 3. Therefore, it moves out. It is barred. Above 50 lakhs and 6 years, you don't need TOLA for 15-16 because you have time till 31/3/2022. It is issued is valid. Simple.
Yeah.
thank you, sir.
Yes, sir. One more question, sir.
नेट पे मिल जाएंगे देखो आपको.
Yes.
May I proceed, sir?
Yes, Mr. Bhavik. Yes.
Yes, sir. This TOLA Act is, as its preamble reads, is only for the extension of time limits under various acts.
हाँ वही है.
However, your means, sir, they have inserted section 168 by TOLA under GST.
Yeah, there's no problem. See, no. One portion of TOLA is extension. Another portion of TOLA is amendments also.
But, sir,
So-
insertion is not there.
No, this TOLA is two. It's a twin objective. Whatever we are concerned about is dealing with the extension part. See, section subclause 2 deals with extension. 3, 4, 5, 6 and all deals with several laws, direct and indirect, carrying out large amendments. Even income tax, they made a lot of amendments through TOLA. That's separate. Let's not worry about that. Yeah. This, as far as clause 2 is concerned, it's only confined to extension. And we dealt only clause 2. We did not deal with other provisions.
Okay, sir.
Okay.
Yeah, Vaibhav, you asking some question? So Bhavik is over. Sir, we have one more question from Pujita. And the question reads like this: the airport authorities building commercial complexes for rent, lounges, etc. Can it be IPC be availed in case either on under 17(5)(c) or D is the question.
If the airport is renting on its own, it will be on account only, on account. So it will be governed by 17D. If it is rented to somebody else, according to this judgment, it's eligible under the functionality test. But we have some reservations on that. Let's see.
Thank you. Is there?
Hello, sir.
Yeah.
Hello.
Yeah.
Can I ask the last question?
Yes, you're a student.
Sir, I am chartered accountant.
You're a chartered accountant. You look like a law student. Yeah. Go ahead. So I thought I'll give you the chance, like Jagrat. Yeah, please go ahead.
Sir, regarding 15-16, I want to ask, when escapement is more than 50 lakhs, the EO has time till 31st March 22. He has issued notice in old law up to 30th June 21. He has time till 31st March 22, but he has not issued notice in new regime. Then is it time barred?
No, as he done, see, no, see, simple. Under the new regime also he can issue above 50 lakhs and 6 years, he can issue.
So he can issue up to 31st March 22, but once he has not issued up till 31st March 22, and now he issues after Ashish Agarwal decision in July 22. Then it is time barred.
That is bar. That will be straight away bar. That will be straight away bar.
Okay, sir. Thank you so much, sir.
See, we are very clear. We only protected those 90,000 notices issued between April and June 2021. We did not argue anything even for notice issued on 1/7/2021.
Okay.
So those are all to be dealt with non-TOLA basis.
Okay. Thank you.
Thank you very much,
Thank
sir.
you so much. Thank you, all of you. And I'm grateful for this opportunity.
So kind of you. Riken bhai, you have any other formality left out?
Yes, now vote of thanks. Utkarsh, take over the proceedings further.
Before Utkarshji says, sir, the Jagrat Shah is the son of our dear Bishan Shah.
Yeah. He has done intern with me. So don't worry.
Oh, fortunate.
Brilliant fellow.
Oh, very nice, sir.
Yes.
Thank you very much. So kind of you. Utkarshji, you can go ahead.
I think Utkarsh, you are not audible.
No problem. You have thanked me enough. Don't worry about it. I'll say pranams to all of you. Wonderful talking to you. Thanks for this nice opportunity. Huh?
Thank you so much. Thank you so much for sparing your time, sir. And
Duty
thank you
to all of us.
thank you
Thank
the
you.
committee members and all the participants for joining in large number. And Bisan Bhai, especially thanks to you also for coordinating the entire event. Without you, we could not have got the benefit of sir. Thank you so much. Thank you all for joining.
Thank you, Bishan.
Thank you, sir.
Thank you. Namaste. எங்க போயிட்டு கட்டே பண்ணடா எங்க போகணும்